Hey everybody, so as you know right now, as of the time that we're doing this video, Tesla it looks like this, right? So what I want to do really quickly is tell you why Tesla did this. I think it's pretty obvious that everybody's buying it, and that's the first reason why. But there's a couple other reasons why. I want to tell you where I'm interested in betting against Tesla, even though I love the company and I love the cars. And then, as a special bonus, we're going to cut to my friend John Carter and an interview I did with him 6 years ago when he made $1 million on a Tesla trade. And that's because right now, as of the time I'm doing this video, I think he's up $500,000 on his latest Tesla trade. Okay, back in June of last year, 2019, Tesla was trading at $178 a share. As of today, sometime, it was trading over $900 a share. So what happened between then and now to cause this movement? And these are important things to keep in mind when you look at companies like Beyond Meat or other companies that don't have earnings reliably or consistently, but then everybody becomes euphoric about those companies. This is not a video about why I think Tesla is overvalued. I'm not necessarily sure it is. It's just a video about why this happened. Number one, short sellers got squeezed. So the short squeeze went on. There's a bunch of short sellers or people that bet against Tesla and Elon Musk. And the buyers, they knew that. And they knew that if they could force these out, if they could cause the short sellers to take so much loss that they'd have to buy back their positions, that would force the price of the stock up, and then the buyers would win. Number two, earnings. Tesla actually had some, even though everybody said there'd be no way they could possibly do it. Last 2 quarters, they reported earnings. And last of all, China. Now, China's in the news, of course, because of a virus, but the Gigafactory went online within a year in China, and that is probably the biggest news of all. Elon Musk promised that that factory would be online and producing cars by the end of 2019, and he fulfilled that promise. He's famous for making promises that he doesn't necessarily keep, and you have to think about promises from Elon Musk in terms of goals as opposed to absolute certainties. But this one became an absolute certainty, which caused everyone to realize that a lot of his fanciful goals are now becoming a reality. Okay, that's why the stock went up. You could do this with any other stock like Beyond Meat or other ones if they start to take off. Think about it in terms of how many short sellers there are, how much short interest there is out there. Think of it in terms of if the company suddenly reports some earnings, remember, people are going to go wild for that. They went wild when Amazon first did it, and they'll go wild again when any other small company that isn't making money starts to make money. And then, of course, China is the big news. And a company that gets into China and does well is going to be big time. Okay, so now I want to cut to this interview with John Carter that I did 6 years ago when I was on the road across the country, and the time he made $1 million trading Tesla. All right, testing, that's on. All right, John, so recently you closed a trade on Tesla. It was like a million. I mean, this is for real. Like $1 million. It's $1 million, right?
It was my first ever $1 million day trade.
So take us through. I'd love to hear about this, and I know people would be interested in this. It's not just about the huge big win, but there's gotta be a story behind this. Did you know this was coming, or did you just kind of set it up like you set other stuff up, and it just turned out to be huge?
So, I mean, the one thing is, like, you never know. It's very rare when something actually works out exactly like you think it's going to be, right? So I remember that day because I'd actually done a trade in ICPT, which was that crazy stock that went from like 50 to like 300 or something like that. So I was in it, and honestly, I was kind of chasing it. It was a little late. Yeah. I was just kind of messing around with it, and I was at the point where I'm like, why am I doing this? And I just, I got rid of it. And as I was doing that, I saw, and I'd noticed on that day because I'd been following Tesla, and Tesla, I remember seeing it down like 5, and suddenly it was up 5.
Yeah.
And 10-point swing like that. And so I just kind of, I checked my favorite place for news updates is on Twitter.
Yeah, right.
So I'll just kind of, I hashtag Tesla, and it's like, oh, like Elon Musk came out and just said something like, hey, sales are going to be better than expected. And usually something like that combined with a very high short interest stock.
Right.
I mean, usually it's going to turn into something again.
Yeah, and by high short interest, you're saying there's a lot of people out there that say this is quadrupled in the last, 16 months. This is way overbought,
and I think short interest is like 30%.
Okay.
Yeah. So when you get that combination, it's usually something where it's kind of like like if you're short the stock
Yeah.
and you've made some money and you hear something going like, oh my God,
You're about to get
Right.
squeezed.
and when short interest is that high, it would actually take, I think it was something like, I calculated it would take, based on Tesla's average daily trading volume, it would have been 2 weeks for all the shorts to cover.
Okay.
So
There's not enough volume. There's not enough people for those people to cover fast enough if things go wrong.
right.
Right.
So that the main reason that is important is because it's making the decision of holding on.
Right.
So I got it. So I got in. I just started, and I started. I ended up taking a big position, but as I got in, I trailed up a stop.
Okay.
So it wasn't like, oh my God, I got this huge position. I'm either gonna like lose my ass or make some money.
All right. Okay.
Right. So I started off. I got like 100 contracts. It would go up a point. I got another 100, to the point where I had a third of my account in it. Which that's
So that right. So this is totally atypical for you at this point.
correct. Yeah. This
Yeah,
is
right.
not a normal. This was just one of those things where, as a trader
Yeah,
watching the markets
right.
and recognizing this is a unique opportunity.
Do you find, just to stop that for a minute, I see all these, we're involved with, we see a lot of people, we talk to a lot of people, we've seen all these forums, we've heard all these conversations. But there are a few times a year when you have to throw out a lot of this conventional wisdom, this stuff that you overhear that just has become cycled into the conversation. So it's like you can't, I think traders find themselves unable to act on their convictions because of some platitude that they heard. But you're not going to throw it out willy-nilly. You just recognized this, and you stood. If this didn't go right, you were going to stand to lose something bigger than usual.
Oh, sure,
All
sure,
right.
yeah. No, this was a
So this is not a conversation about like appropriate money management, right?
no, absolutely not. And I think
Yeah.
it's important for people to realize it's not like you wake up one day and say, you know what, today I'm going to go balls to the wall. I'm going to trade 10 times my normal size
Yeah, right.
because I feel good in my heart.
Yeah.
That's obvious. And it's just that one of those things, like in trading, when you learn the trading rules, that will keep you safe, and that'll get to the point where you could actually do this on a more consistent basis. But there's
You earn the right to go against conventional wisdom when you've done something so frequently and so often that you can recognize an anomaly.
right.
Yeah.
So the main rule I broke would be position sizing.
Yeah.
But in saying that, I didn't go all in. I was scaling in. I was trailing up a stop. So at any given point, I mean, the surprising thing on that is I just thought, okay, here, and especially when you start making something on the trade. I mean, and sitting there, I'm up like $250,000.
Right.
That's a great trade. I
Right.
will,
Yeah.
I'll take that any time. And at that point, my stop loss was, if it came back and hit my stop, I'd have lost about 10 grand.
Okay.
And you look at that, and that's the toughest part, where you have to make the decision of,
At the beginning of this year, I went through this myself. At the beginning of the year, I was up a substantial amount on a euro Australian dollar trade, and it was close to my profit target. And I had the chance to close it out and make a nice profit, or if it turned around, I was going to make nothing.
right.
And I sat there. My hands were shaking.
Oh,
Like I sat there. I'm like,
it's
no,
tough.
I can't touch it. So you could have just as easily. I mean, this all could have been. We could have been talking about the day you lost
10 grand.
10 grand.
Yeah, I mean, the day it got away. I mean, it's one of those. So yes. So part of it is I broke my money, my position size rules.
And do you really have rules? I mean, is that?
I wouldn't call it. I don't have it programmed where it's like, okay, I can only do $28,682 on
Yeah,
this trade.
I can't stand. I'm so glad
So
to hear that.
it's ballpark.
I just think that it does everybody a disservice when we talk about such specific money management rules that people, it wraps you up in this idea that that's going to be your free lunch.
Right. It's
all
really about risk. I mean, it's kind
Yeah.
of like if you take on bigger size, you've just got to acknowledge that you're taking on bigger
Okay.
risk, and you generally have to have tighter stops.
How long were you in the trade? So you're in the trade. It's up $250,000. How long has it been that you've been in the trade?
All right. So here was the toughest part. So I got in the trade at about 11 o'clock in the morning.
All right.
By noon, it was up about $250,000.
All
Right.
So,
And at that point, my hands started shaking too.
Right.
And because I wanted to get out. So I went up. I was actually here at at this house. I went and took a shower.
yeah.
And just had to get away from the computer.
Yeah.
Did all that, came back down. It had rallied another. Okay, so the toughest part was it was up. I came out of the shower, it was up about 300 grand. The toughest part is that then it started to pull back.
Yeah.
So it had been grinding, but then it started having a multi-point pullback. And at that point, I was like, you know what? I've got my stop in place. This is a unique situation. I can't watch it because if I watch it, I'm going to dump it.
Yep.
So at that point, I got in the car and I drove around for an hour.
I have a P.O. box, so I could go to the P.O. box and hang out at the UPS store and just like, hopefully there's a box from Amazon there with some goodies in it that I can pay attention to. So,
yeah, no, I went and got a latte. I checked Twitter. I just didn't look at the markets.
Yeah.
And so at that point, yeah, then I went, and so that day I'm in our trading room 3 days a week in the afternoon. So and then I was So I was scheduled to go to the trading room, and it was interesting because I walked into the office, and Jeff, he came up and said, I forgot what he said to me, and I said, yeah, I've got this trade on in Tesla, and I think it could be
super trade.
I think it's going to be the big, the biggest trade, it's going to be a really big trade. He's like, oh, you got a 6-figure trade on. I'm like, this could, and I told him when it was up about 600, this could be a 7-figure trade. And he's just like, what are you talking about? And so at this point, I had 600 contracts on. I have a portfolio margin account, so I also bought shares.
Okay.
And yeah, and then at that point, when I got into the room, I really didn't want to say anything. I just said, "Hey guys, I like Tesla here," and I placed an order in the room because we like track the trades.
Right.
And Gracie. And so at that point, it was I just placed an order to buy it. These are new contracts. Tesla had already rallied 10 points.
Yeah.
But it just still had. I mean, it's a short covering kind of rally.
So you even added to a winning position.
Mm-hmm.
Yeah. Go with what's winning.
Yeah, right? So that was it. And then what happened is, and then the last 30 minutes of the day or so, it was consolidating, and then it broke out and rallied into the close. And at that point, at like 10 minutes before the close, it crossed the $1 million mark.
Yeah. Now you held this overnight?
Okay, so good question there. So I sold a third of my position into the close.
Okay.
And then I held.
Was that hard to do? We talk about staying in something that's pulling back. Is it then hard to close some of it out when it's going well? I know traders ask this question all the time. They say, when it's really going well, I sometimes can't get myself to pull the trigger and actually take the money. It's
tough. Now, the thing is, and I don't know if you remember it, so the next morning Tesla got up 10 points.
Right.
So
I remember it all, yeah.
Yeah, no, it was, so, I mean, and I continued, so on the 2/3 position I had, I mean, it ended up being a $1.5 million trade, which was...
I watched you the next morning, and you were I could hear it in your voice, you were nervous.
Well, so here, the thing is like, that's probably, as a trader, it's the best thing and the worst thing that can happen, because you're in an options trade, and then half an hour before the market, it's up 10 points, and you can't do anything.
Right.
So, I mean, it could easily, because at that point...
It could gap open lower.
It could gap open and sell off. It could, someone was saying, well, you could short the stock. I'm like, 60,000 shares of stock pre-market, you're gonna short that and hedge it. So the worst thing is because when you see that it's up 10 points, mentally you've already started,
calculating the money.
Yeah, you're like, wow, my account's balance is gonna be this and stuff like that too.
Yeah.
And that can get a little nerve-wracking.
Yeah.
So yeah, so when it opened up, it was, it's just get out.
Right. I remember your phrase was, I could wait a little longer or try to get a better price, but I'm not going to be a dick for a tick. And I thought, excuse the language. I thought that was hilarious that at this point in time, you were like, this is about knowing when it's over.
Yeah. I mean, it's like, and since then, I mean, it's gone, I think it's gone higher still. So, I mean, had I held on.
Theoretically. Okay.
Right.
So I've watched it since then. And that was my follow-up question about this trade in particular was, is there any regret at all? Do you ever struggle with that regret of missing out on what you could have had? I mean, you've been doing this a long time, so I'm expecting the answer to be no. But for the sake of asking this question, how do you deal with not getting the full ride?
So here's the thing, and I found in trading is that anybody who says that they're an unemotional trader is a liar, right?
Right.
So, but what happens is the longer you trade, the more you get used to that.
Mm-hmm.
So, the first time you go into a gym, you can do 5 push-ups. You do that every day. 6 months later, you can do 20, that kind of a thing. So what happens is that the regret for missing trades, the anxiety of losing trades, it lessens.
Or it's the same amount. It's just like living with an injury. Like, I know I'm a defective human being and I have these problems, and now I'm just learning you have coping mechanisms to deal with those things.
It took me a long time to figure out, but in trading, you can make a lot of money not being perfect.
Does being on the hook for it publicly change anything about it for you?
Yeah, well, the part there's pros and cons of throwing yourself out there, because I'm very conscious that first of all, it's by doing this, I almost didn't share it. I mean, I was just
Yeah.
kind of like, you know what, this is just
It's too much.
It's too much. This is just, hey, you know what?
Sets a bad example, or it might get people they might try to chase this, and then it's
Yeah,
too late to get in.
yeah, or think it's too easy. But I mean, it's one of those things where it's like, had I only been trading for a couple of years, that wouldn't have happened. So
Yeah, sure.
that's that part of it. But on the other hand, I kind of like people to see what's possible.
Yeah.
And because trading is hard. I mean, there's many times when I'd almost throw in the towel, but it's just like one of those things where, and like Jesse Livermore. I mean, his book is awesome. But at the end of the day, he committed suicide.
I say this all the time.
Right?
I'm like, that's not my hero.
Right.
My hero didn't commit. My hero might have had far less money than him, but didn't want to kill himself. Yeah.
Well, and if you think about it, and I think I mean, nobody could read his mind when it happened, but he made like I think it was like $100 million in the 1929 crash. As a trader, wow, that's your killing, and then he pretty much lost it all.
Yeah.
Over the next 4 years,
Right.
Trying to recapture that, and at that point, I just think it became too much because at some point when you're trading, you're like, okay, I lost this money, and you've always got this contract with the market that you want to get that back. And then make a new equity high. And I think he reached a point where he realized that was never going to happen.
That's got to be depressing.
So you don't want, as a trader, you want to be conscious of that, and then have your risk size appropriately so that you can always, the cliche saying, live to fight another day is completely true.
Is that trading style, was this a unique experience? This identification that it was down 5, up 5, check Twitter, shorts getting squeezed. Was this a unique situation, or does something like this happen a couple times a year? If you are a student of the markets and you wanted to stop yourself and pause this recording right now and say, wait a minute, is this a strategy? I mean, looking for stuff like that?
So I'd say that it absolutely is a strategy. It's just one of those things when you can never know because it's based on. So if you have a good example was recently with GMCR. After the earnings came out.
Yeah, the coffee company.
Right.
Yeah.
They also announced that Coca-Cola, bought 10%, and that had a high short interest. So what happened is after hours, it closed at 80. Now I realize this because I sold naked the $100 calls.
Okay.
And it opened at 110 and went to 130. So now as a trade, luckily, yeah. So now that was luckily on stuff like that, when I'm selling naked options, I sell small size. To put it in perspective. I had at one point over 1,000 contracts on Tesla. I sold 10.
Right.
So it's very manageable.
Yeah.
But I was buying the stock after hours to hedge that. But I mean, so the point is that this stuff does happen, and it's what I like to do, and especially after this Tesla trade is just kind of having a list. What are the short interest stocks?
Right. Yeah.
But here's the other thing that's awesome about it too. So I remember this trade. One of my best trade in 2010 was on Rackspace.
Okay.
So Rackspace was trading at $20. It had a short interest of 25%. Okay, and it was a very bullish chart. I mean, if you're into like Can Slim and reading patterns and stuff like that, it was like a cup and handle pattern on a weekly chart.
Right.
And you've got high short interest, and it's the same thing. Now there wasn't a news event that triggered it, but it was just kind of like this is a bullish pattern. When it breaks out, these guys are gonna have to cover. The stock went up 100% in 8 weeks.
Right.
It was a great, and the same thing. I just bought options.
Do you use options because you get more bang for the buck? The same move produces a greater return, or do you use options for some other reason that I don't know about?
Yes. I mean, so the thing with options, if for people who aren't familiar with options, a lot of times options can trick traders.
Yeah.
Because the whole thing of the premium decay.
Right.
So options. Right. It's if you buy a stock that essentially, say you think a stock's going to go higher, if it goes higher slowly at the same rate that the premium is decaying on the option, you can lose money. You could be right on the stock and lose money. Right. So
because the option's not going to be tracking that stock given the amount of time left until expiration. Right.
So there's like some things like, but there's like market makers, they never buy options, they always sell them.
I hear these things. I hate hearing this stuff. I heard the other night at dinner, well, everybody knows that the people making money in options are the ones selling for premium. And I'm like,
they're also the ones that get blown out of the water.
Yeah, like Victor Niederhofer. Hello.
Yes.
Yeah, he made $100,000 a day until he lost $10 million in a day or whatever.
No, he lost $300 million a fund. Yeah.
I think I bought some of his his China.
His book is actually a really good book. But what happens with premium selling is that you make money 11 months out of 12. So and then on that 12th month, you essentially lose everything.
Yeah, so it's not like you can't make these statements about this one kind of options trader makes money. You can't make that kind of statement, right? That's just a useless thing to say
Right.
in passing. And I find it when I talk to, and I've talked to hundreds and hundreds of traders over the years and thousands of retail traders, and I keep going back to the similar pattern that we hear about money management and we hear about having a strategy and we hear about having a set of rules, but everybody that I'm talking to that's found it a rhythm is setting themselves up to just go with whatever's in front of them based on all the experience that they have. I can't stop these people and say, write down your 5 rules, but I can in every case ask this person, what are you looking at right now? And they know exactly what's on their mind right now. They know exactly what's on, but they couldn't write down their rules. Whereas a lot of inexperienced traders that are really trying hard and doing their best, they could write down their rules for you because they've learned that's important.
Right.
What are the best 3 things that are in play right now for you? They don't know yet. They don't remember. They're going to wait till tomorrow when they open it up, or they're going to wait for someone else to tell them. So I find this true about you too, that it's like if I asked you, please write down your rules for me, that's almost a useless question. It's like, what's the political affiliation of a tuna fish sandwich, right? It's like, what is this? You can't answer
I gotta think about that.
I don't know where I heard that, but I didn't make that up. But it's not the question isn't relevant. The question is, how do you know, given the state of market conditions right now, what you should be doing? You look at market volatility, the trends. What other things do you look at to sort of get a sense for what's going on?
Well, it's a good question, because I think what finally helped me is coming to terms with the idea that I have no clue what's going to happen next.
Okay.
And so you have to have a little bit of an idea of, like, so right now as we're doing this, I mean, the markets just had a pretty nasty sell off through most of January.
Right.
They bounced hard on Friday.
Right.
And I'm at a point where I'm very light right now.
Yeah.
Like, I'm 95% cash.
Mm-hmm.
I know the setups that I like, but I don't like this market.
Right.
And I also found that, so if there's little things that you kind of quirks that every personality has, and I find that if I'm in a situation like, say, like, wow, I hate this market long, and I really want to get short, that's generally you need to go with the trend. Because because the market is very good at tricking people. Like, oh yeah, look at me, I'm too high, you should short me, right? Which is the worst thing you can do.
Yeah.
So if I have a situation like that where it's like, God, I really want to short, I hate the market long, I just go long, because that's the trend. It's the trend.
So like a default move is to don't forget, like the market tricks people into selling the highs.
Exactly. Oh yeah, exactly. Or yeah. So, and what'll happen is that, so right now I'm trying to pay attention to where it's like, I want to short, but I'm scared to short. Mm-hmm. But also, I look at the market right now, I'm like, there are times when the safest trade is to be flat. Mm-hmm. So you can be long, you can be short, you can be flat. And if you're flat, what happens is that you maintain a neutral state of mind, and then when an opportunity comes, you have a fully loaded gun to take advantage of it, as opposed to like, God, the last 3 days have been so stressful, all the trades are going against me, and then this great opportunity comes, you don't even pay attention to it.
Yeah, I found that to be true for myself, and I know it is true for others. What about earnings? We're in earnings season right now. It's like an earnings bonanza or whatever right now. Mm-hmm. Is there a way that you find patterns or find opportunities out of the earnings mess? I mean, do you see opportunities before earnings? Which once again, one of the things that I've heard all the time is never trade going into earnings. I don't know. That sounds ridiculous to me. It's just because the word never is in front of it.
Well, yeah, I actually think earnings offer amazing trading opportunities. Okay. Now, the main thing that it's just like, as a retail trader, what I used to do is like, okay, before earnings, I'm going to buy a straddle. Well, that's essentially a losing proposition. Yeah.
Okay. I'm not going to I don't have an opinion. I'm just going to try to be right if it breaks out in one way or the other.
Yeah.
Yeah. That's being lazy.
Yeah. And it's that, but it's also, that's where the options are priced. I mean, that's where the math comes in, where it's kind of like, if you look at, like, say, Google puts the day of earnings, at the money puts that would expire the next day, we're trading for $35.
Okay.
So if you bought a put thinking it was going to go down, well, a lot of times, if it would have gone down only $35, you wouldn't have made any money.
Yeah.
So so the option prices are so jacked up before earnings.
And it's Google.
Right.
So, yeah.
So you get like a GMCR, that's an outlier. That happens like 2% of the time. Mm-hmm. But no, I'm a big seller of options right into earnings.
Okay.
So the idea is that, you kind of, with Google and a lot of those companies where when the earnings come out, what happens, the option prices just collapse.
Right.
The move, and generally, if the move last time was this fantastic, crazy move, what happens is then the next earnings, everybody thinks it's going to be this crazy move, and it's usually muted.
Yeah.
So the option prices are ridiculously priced, and you sell them, and you can do spreads. You're not going to get hurt.
And this is because option prices are not just reflective of the underlying fundamentals of a company. In fact, option prices are as much a representation of what the panicked investor thinks the recent volatility has been, what the volatility the last time around this same kind of event was, how much time is left in the scenario. But sometimes, right, there's, like you say, right before earnings, everything gets more expensive, but it's not really worth anything more.
Correct. So what happens with options is there is a nervousness pricing. And
I love this. This conversation I love. I love this conversation. This is fantastic.
Well, so if you think of so normal price of an option, say, is right here, and here's earnings. And what happens is that normal price of the option actually can triple, quadruple, quintuple right before the earnings event, because people are so nervous they don't know what's going to happen. And so if they're nervous,
there's people hedging because the earnings are coming out. There's people trying to speculate before the earnings come out. So there a whole bunch of people are coming in that wouldn't ordinarily be there, that are usually setting a pretty normal price.
Exactly. And so what happens then is so the one guarantee with earnings is that, so the implied volatility typically of the options, so the implied volatility, and all that is that the higher the implied volatility, the more expensive, the higher the...
Right.
Get him, Gracie.
Options on a financial instrument that is predicted to go wild are more expensive.
Yeah. Right. So the guarantee is that right after earnings, all of that nervousness and all that stuff, the implied volatility will collapse. So it may normally be 30%. Before earnings, it's 120%. The day after earnings, it goes back to 30%. So all that nervousness pricing evaporates.
Right.
So if you sell options, you can even sell. It's honestly,
they're going to be worth a lot less within a short period of time.
Yeah, and the way to get consistent making money on options is probably the complete opposite of what most people think. Most people think, oh, I should buy a straddle. No, you actually sell a straddle. So you sell the at-the-money calls and you sell the at-the-money puts.
Oh yeah, right. So you're selling that's fantastic. Are you selling volatility? What are you doing?
Yeah, you're selling. So what'll happen is you just so I did this on Google or there's Google, some other ones, but if the at-the-money puts are $35 and the at-the-money calls are $35, that means Google has to move $70 one way or the other for you to start losing money on that trade.
Right.
So now what'll happen too is you can obviously make it as a spread too. So if you have a big account, you do small size. If you've got a smaller account, just do it as a spread.
Yeah.
But what happens is that if Google actually stays within that range, all that panic premium evaporates and goes right into your account.
Right. So yeah, you essentially you get paid for something that tomorrow is not going to be worth as much.
Exactly.
Yeah. That's a really neat perspective. Options seem like, pretty much for someone like me, seem like to be the quickest way to lose a giant amount of money. For what kind of a person are options just not a really great idea?
Well, I would say, and you make a good point on that, because if you don't understand options, they're generally not good for. So the rule of thumb, as I always tell newer people, is just think of, if you're new to options, say you're looking at the euro or something like that, and you want to buy an option on the euro. Just think of the option as a way to get the stock at a cheaper price or to get the ETF at a cheaper price. Yeah. And this means don't screw around with these out-of-the-money cheap options.
Just make a directional bet.
So, for example, if say a stock like Tesla. So when I was buying all those calls on Tesla was trading at 160. Yeah, 160. Yeah. So I was buying $150 calls that were pretty
in the money.
Right.
Okay.
And then as it went higher, I would buy, so it wasn't like, oh my gosh, this is an amazing experience. I'm going to buy these cheap, 25-cent options in Tesla.
Okay.
I'm not going to buy the $225 calls and pray.
Oh yeah, that's really fascinating, because when I look at an options chain, I'm like, what's cheap?
That's the
no
worst.
wonder I'm a terrible options trader.
worst thing you can do. That's like asking a dove what its politics are.
Yeah. Okay. Great.
Or whatever that quote was he said.
So you look for an opportunity that exists based on information outside the option itself.
Correct. Now,
whereas I look at the option itself and I say, what can I make out of this? That's a really
Yeah,
backwards
yeah.
way to see it, I think. But you've had strategies that look for,
Oh,
grossly
yeah.
mispriced options.
No, absolutely. No, but I think the main thing is if you're newer to options, your main analysis needs to be on the underlying stock or currency.
Yeah.
If you think it's going to go higher, then buy an option that's well below the strike price.
Yeah.
If you think it's going to go lower, then buy a put
Mhm.
that's well above the strike price. Because what's going to happen is as the stock moves, your option's going to move.
Right.
What most people do is they're going to buy the out of the money, and that gets frustrating because the stock could move in their direction,
It's
and
not
they
going to catch up.
still lose money.
Yeah.
They still
Right.
lose money because it has to have the thing about it. And this is actually all mathematical probabilities too. But if you buy a far out of the money option, the stock has to have a move that will only happen say 12% of the time. Like it needs to have a news announcement. It needs to have a surprise because
Got it.
all the news out there is already factored in.
Right.
So if all the news is factored in, the out of the money options are priced fairly. They're priced to expire.
Yeah. Well, that's I think maybe that's my takeaway here. That's why they're cheap.
Oh yeah, no, absolutely, absolutely.
A couple last questions. Did you study math?
I was not I had math classes, stats,
Okay.
statistics, and things like that.
Yeah.
But yeah, I was definitely not a math major.
So is it essential in your opinion? I mean, it's just an opinion, but you're a respected individual in this space. Is it really like is that a big deal?
There's a workaround to everything.
Okay.
So as long you don't need to know math, but if you're trading options, it's important to understand. If you're
Right.
going to get into more advanced option stuff like selling options,
Right.
you just want to understand some basic stuff like standard deviations,
Yeah.
implied volatility. But like there's like with options, I am in no way, shape, or form an expert on the Greeks. Vega, theta, all that kind of
Right.
stuff. I get it, but I don't sit there and say, okay, my Vega is changing, so this is
Right.
going to happen. You don't need to know that stuff.
Do you set goals?
Absolutely.
Oh, you do.
Oh, yeah.
You're a goal setter.
Yeah, I am. So the most difficult thing on the planet for a trader to do responsibly is set trading goals.
Yeah.
Because
Right.
they're both limiting.
Right.
Okay, and they are also you don't want to get in the mindset of going like, okay, my goal is to make $100,000.
They can also be delusional.
It can be
Yeah.
delusional, and it can force you to trade. So if you're
trade to
trading
meet
for
the
the
goal.
money,
Yeah.
and if you're trading for money, you're naturally going to do the stuff that most traders do to lose money. You're going to take small profits. You're going to have huge losses.
Yeah.
So I think it's good to have a gain. Like I'll say, I'd like to make X amount or more,
Okay.
and I try to use it as a fairly conservative goal.
All right.
I'm a very good. I like to take money out of the market. So
I've seen you talk about taking money out every week.
I go through periods of time where I'll do that, and
Yeah.
I like I stopped at the end of this year, and I haven't done it yet this year. I kind of was like I got this Tesla trade, got this stuff, and part of it is, and I'm kind of reassessing my goals for the year. Like okay. Do I stop trading for the rest of the year? No. All right. Do I really go for it and try to do something crazy this year? Well, that's also a stupid idea. So
Yeah,
it's
sure.
it is trying to.
So you're assessing what situation is now and what that might be able to lead to. So
Right.
You're constantly reassessing what your goals are, but you use them to motivate you. I mean, that's what the purpose of a goal is for you, is to motivate you to.
I always like to say like I like to know where I want to be a year from now.
Okay.
But not in the sense of like it's just more that when I wake up, it just kind of gives you these are the things I want to be doing today. Because what's going to happen is, I mean, when you're trading, you're traveling. I got 3 young kids. Things get crazy, and it's easy to forget. But
Yeah, right.
if you got an index card that says, okay, I want to learn how to ride a horse. I want to be able to at the end of the year have a Schedule D that looks like this. It just it just helps keep you focused. You don't get too distracted.
Right. I've noticed that in my life as a trader, or in the lives of traders that I talk to as I go on the road, that the traders who set goals that are experiential in nature, I want to have these experiences, and then they use trading to pay for those experiences,
Absolutely.
are far more likely to not only be motivated by the goals, but far more likely not to let the account dwindle or do something ridiculous, because it risks not having the experience that they wanted anymore. Whereas if it's just money and it's a game of money, it's losing the money is part of the game. Like it was all, if you lose the money, then it's exciting. And I find that if someone says, I want to buy a horse, or I want to go on vacation with my family this year, I want to take a month off, they look at their account differently, and they say that account represents taking the month off. So
it's a good point, because one of the part of why trading can be fun is the excitement.
Yeah.
And if you get into a loop of, wow, I'm making money, I'm bored, I want some excitement. Well, subconsciously, you're going to create that excitement for yourself by losing a lot of money and getting to the point where, okay, now I can make it back, because that's an exciting thing for a lot of people.
Yeah.
And, part of why I would do the wire outs too is I'd sit there and say, wow, why am I doing this crazy thing? I only need to make 2%. Let's lighten up, and that money would represent, let's go. We're gonna take my family and go spend a week in the Caymans or something like that. But it becomes a real life experience as opposed to, oh gosh, I lost 20 grand. I guess I gotta lock up for the rest of the year and try to make it back. And that's not, I don't want to be the trader guy that's in a hole in the ground, making back everything I lost.
Absolutely. Well, thanks for spending some time talking about it. I'm sure that there's a ton of insights here that are going to be helpful to a lot of people.
Well, if you know what they are, let me know.
I'll let you know. I'll get you the interview when it's done.
Okay, cool. Thanks.